What's up everybody? I hope you guys will be having a good time. In today's lecture we will discuss an important ICT structure which repeats exactly the same way since decades. I have backtested this structure for years and now I personally use it for most of my trades. So if you use it and go by the rules, this strategy will make you a good fortune. If you are an old follower, you might have seen this strategy already before, but today, I will do some important additions to it. Besides, I have some really excited news for you guys which I am gonna reveal at the end of this lecture. Another important thing, you don't need to go after every other ICT strategy. One strategy is enough to make you a good trader, and if you haven't mastered any strategy yet, then this one is the best to master. Before starting the lecture, I will advise you to pick up a copy and a pencil and note down every minor detail. Also, I will advise you to watch the whole lecture and don't skip it in the middle, because it will just be a waste of time if you can't watch the whole lecture. It won't do any good to you because you will miss important points, and as the saying goes, half presupposes danger to your faith. Make sure to like and subscribe for such content in future. So you might have seen people drawing and talking about the importance of this structure, but when you try to use it by yourself you lose all your money and almost trades go against you. This is not because the strategy doesn't work, but because you are not using it the way it should be used. In every strategy there are some important rules, and if you don't follow and respect them, the price action won't respect you and you will be on the losing side. So before learning a strategy and before using it, it is important to make up your mind that your strategy is the best, and if you go by the rules no one can stop you from becoming a successful trader. Positive mindset is the key to become a good trader. Now, within few steps I will teach you all the minor details that you have to look for in this ICT trading strategy. You have to follow all these steps if you want to use it to perfection. Here is our step number 1. The first thing you need to do is open your 4-hour chart and wait for a swing high to form on 4-hour time frame. The swing highs and swing lows are important because these are important buying and selling points, as there is a lot of liquidity at these points. Market always moves towards the point of liquidity to execute the big buy and sell orders. Big orders can't be executed if there is no liquidity because then it will affect the market price of that asset. Once the swing high is formed, you don't have to do anything except waiting for another swing high to form on 4-hour time frame, which takes us to our step number 2. In this step we will get a sweep of the previous swing high. The sweep is important because it hunts so many stop losses and takes liquidity. These sweeps hit the stop losses of 90% of the retail traders, and the institutions fill up their orders at these sweeps. Retail traders think of it as a market structure shifting, while in reality these are turtle soups. So now you can see the previous swing high has been swept by the recent swing high, and this is what we were waiting for. Now the stop losses are hit, and orders are filled, but still it is not confirmed, so for confirmation we will enter into step number 3. In step 3 we will wait for the close of these 4-hour candles. These candles should close below the previous swing high, as you can see in this encircled area. Had this 4-hour candle closed above the previous swing high, then the structure would have failed, and in that case we will not proceed to the next steps. This is all we have to look for on the 4-hour time frame. After this we will shift to 15 minutes, and the step number 4 will be to identify the last swing low that was formed before sweeping the 4-hour swing high. Here you can see, this is the last swing low that was formed before sweeping the high, so we will highlight this point. After finding this swing low we will move to step number 5, which is waiting for the price to close below this 15-minute low. In this picture you can see that the price has closed below this important level and has left a big fair value gap on 15 minutes time frame. In trading terminology we call it the market structure shift. Some people call it the market structure break, but itself wrong because we use market structure break for higher time frames like 4-hour and daily. Now that we have got the market structure shift and a good enough fair value gap, we will look for an entry into our shorts because every condition has been met and the structure is ready for a dump. But you cannot enter into shorts randomly at any point, and we will use step number 6 for entry. In this step we will draw a fib line from the top to this temporary bottom or swing low. You can see in this picture that I am using the 0.5 fib level. So once the price goes above this fib level, this is where you will enter into your short trade. You have to be careful about one thing here. If the price makes a big move towards the downside before going up to that 0.5 fib level, then better not to enter into this trade. The reason behind not entering into it is the probability becomes lower, and then there will be chances that the price will do another sweep and it might become bullish. By now you would be into your trades, so then the next and the last step will be putting stop loss and target level. So the stop loss should always be above the swing high. The reason for putting it somewhat above the swing high is that sometimes there is spread, and your stop loss will get hit if you put it at equal highs. Also, most of the noob traders put their stop losses at these points, so the market goes up, makes equal highs and then goes down. I personally put my stop loss 5 or 10 pips above the swing high. As far as the target is concerned, I mostly go with 2.4 RR. But always make sure to take some profits in the midway just to be on the safer side. This example was for the short trades. For buying or for long trades, the concept is the same, and I am sure you will be able to do it by yourselves by now. Okay, so the news I was talking about is that I will share the link to my premium WhatsApp group in the description of this video, and you guys can join it for free. It will be in the description for 1 month only, and then I will remove it. I will be sharing live calls in my WhatsApp group, and it's gonna be once-in-a-lifetime opportunity for you guys. So don't miss this opportunity and join the WhatsApp group now.